Roy Smith is our corn and soybean market analyst this week. With the U.S. Department of Agriculture finalizing its numbers for the 2016 harvest a few weeks ago, estimates for corn and soybean output now turn solely to South America. The agency's next look at supplies for Argentina and Brazil is scheduled for February 9th. There will be another update in early March before the USDA's first survey-based acre projections for American production in 2017. On March 31st, the agency is slated to release its report on prospective plantings across the country. While this period may seem slower for hard data, the January to February transition triggers one of Roy's always-never strategies. We talked with him Wednesday afternoon about why he never sells soybeans in February, but we started by asking for his analysis on recent price movements in corn and soybean markets.
Well, first of all, the soybeans, we had a nice rally after the first of the year, and really, in terms of the futures market, a nice move up, but we didn't get much improvement in the basis, and so we're still almost a little short and breaking even on the beans that are in storage. And in terms of the corn market, it's up and down a little bit, but just not, seems like it never goes anywhere. And we did get a little bit of a rally here a couple of weeks ago, and picked up maybe 15 or 20 cents on the corn market, but then it backed off, and we end up back almost where we were, not quite. So it's been frustrating, but then that's this time of year, that's what you get. You know, I always had one of the principles in my marketing workshops, the function of the market in January and February is to make farmers mad, and it's working pretty well.
Describe why basis has been so disappointing.
Well, personally, my opinion is that the basis has been frustrating because we still got corn piled on the ground some places in Nebraska, and I don't know how much is piled on the ground or exactly where, because the elevator that I go to never really did have any piled on the ground, but they managed to keep it moving. But one of their branches still does have corn piled on the ground, and my thinking on the soybeans is the reason that the basis is so bad is that we had a tremendous crop here in 2016, and those beans are still available for the processors to use. They're probably all hedged in a bin somewhere, but they are there, and we need to eat up some of those beans before you can see much of a big run-up.
Did you move any corn on that little rally we saw?
We did move some corn, but mostly to top off the grain bins so we didn't have a peak to get moisture in them. We didn't actually sell any this last time around, but here it is almost the end of January, and I think, you know, next rally, next time around, it probably we're gonna be into that March, April, May time period when it's is time to do some selling, and you know, don't wait till middle of the summer.
Now, one of your always never strategies comes up around this time of year. It's never sell soybeans in February. Why?
Absolutely, and maybe this will be the year that the market proves me wrong. I keep thinking it will be once in a while, but so far it hasn't been, because historically the highest price for soybeans in the marketing year has never been in February. It's been close 2 or 3 times, but let's face it, you can just look at the calendar and say, well, I'm going to block this bit of time out, and I'm not going to do anything, because historically selling soybeans in February has been a big loser.
How do you when you do meetings around this time of year, how do you approach talking about farmers with determining costs of productions or break-evens as they approach the 2017 or any growing season?
That's an interesting question, because that's one of the disagreements I have with a lot of the market analysts, and they say, the first thing they say is, got to figure your cost of production. Well, okay, that's interesting. Cost of production is interesting, but you don't really know what it is until you know what the yield is. And here it is, January, we're 10 months or 9 months away from knowing what it's going to actually going to yield. And until we know what the yield is, we can't know what the break even is, because there's a lot of difference between 40 bushel beans and 70 bushel beans in terms of calculating the break even. The time to do that, well, first of all, I'm not opposed to doing it, but don't hang your hat on it as a marketing strategy, but know what it is. So if by chance we get a big rally and you think you might want to forward contract some, then you can look at those projected break evens and see where do you have to be to guarantee a profit, and that's what we're looking for.
You don't forward contract a lot anyway in this area, or I guess when you were farming more acres, you didn't forward contract a lot, correct?
I didn't forward contract very much because of the production risk. You know, the worst year I ever had, 1984, average yield on soybeans was around 20 bushels an acre. And boy, if you've got any forward contracted and you get a yield like that, it's really disaster.
No irrigation in this area, I should
No
mention.
irrigation. And the one thing we do have is we have good history on crop insurance. And that will keep you from going broke, but it won't necessarily guarantee income.